Financial and investment services firm United Capital PLC have released an optimistic outlook on the global economy for 2021 titled A Shot at Recovery, or more like this. So, which refers to the importance of vaccines to turn things around. The International Monetary Fund estimates global GDP to contract by 4.4% last year, but rebound 5.2% in the new year, supported by recoveries in emerging markets and advanced economies. Recovery will be aided by bold economic stimulus packages and a massive accommodative policy stance by central banks. Joining us to discuss the report is Wale Olusi, Head of Research at United Capital. Good morning, Wale. It's good to see you. Welcome to the show. I'm going to put back that particular cover page of your reports. I'm going to try to find out from you. How did you guys decide that the virus and the vaccine and a face mask with a shot to the head is what the world needs right now? Good morning.
Good morning, boss. It is a pleasure to be here, and Happy New Year to you. Well, I think clearly it's this very sick world, a sickly world, or a sickly global economy, as if you like to put it. And for us, what we think is that the global economy is in need of a vaccine. We are wearing face masks at the moment because we are afraid of the second wave of infection. And for those that are already infected, or those who are not even sure of their status, it's better to put on that face mask so that you don't get others infected. But whether you're infected or not, everybody needs to be vaccinated for the world to come back to normal. Maybe a new normal, actually.
So a whole lot this year, according to this report, will depend on the virus and the vaccine.
Absolutely. We think it's a balance of factor between how well many government and authorities around the world is able to manage the second wave or the third wave of infection, and of course, the speed at which vaccination will be carried out. Currently, there's the number of vaccine that is available is skewed in favor of rich countries. Many poor and developing countries like Nigeria and many countries in the sub-Saharan African region are not even sure when they are going to get this vaccine. Yes, there are promises here and there, but vaccines has to go around, whether you're a rich country or a poor country, and everyone needs to get vaccinated for us to be able to move around freely again.
So, pillar one, the virus and the vaccine joined at the hips. Then the second, in your report, was about the incoming U.S. President, Joe Biden. Do you think his inauguration from January the 20th will reduce political risk, globally speaking? Do you think the world will get a little bit cooler? The whole rhetoric, the saber rattling between the U.S. and the EU and China, all the way down to Mexico and North America and even Africa, will change a whole lot better with Biden in the White House?
Absolutely. What we think is that the current U.S. president, who has been in the reign of affairs for close to 4 years now, quite boisterous. He wants to make America great again. He has renegotiated almost all the deals that President Obama, negotiated before his tenure ended. There was a lot of back and forth between not only the US and China, but with the EU, with Germany, with Mexico, with almost most of the countries in the world. And we also saw what happened between the US and Iran last year. And of course, the issue of climate change. I could quote him when he said he doesn't believe in climate change about a few years ago. But with a new president, with a new sheriff in town at the White House, what we think is that a President Joe Biden is probably going to be somebody that is ready to meet everybody at the middle ground. He believes in climate change. He has appointed, John Kerry to be a global climate change champion. Is probably less going to be, a little bit, how will I put it now? Maybe contentious as far as trade negotiation is concerned. I think it's going to be a bit more diplomatic. So we think in terms of global trade and global politics, that risk would be a little bit lower compared to when we have President Trump there.
So let's move on to the markets now. We saw unprecedented central bank stimulus around the world last year to support the economy. The last count was about 12 trillion US dollars or so. So your reports at United Capital, you are calling for more money to be spent in line with the World Bank and the IMF and a few other multilateral agencies. So my question is this, and I want you to think very carefully about it. If the world is awash with so much dollars, what happens when the economy of the world is not as productive as it should be? Is there a big danger here?
Well, it may seem like a big danger, but the global economy itself is in need of a lot of liquidity. If growth is weak, then we need to be able to raise consumption. People need to be able to, spend, or what they used to say in theoretical economics, spend your way out of a recession. Production will come. Maybe this is one of those times when the global economy will depend on JBCs. Demand will create its own supply. We need to go back to the factories, but people need to be able to at least sustain their livelihood. And that's what we've seen with the US Senate when they passed a stimulus package late in December last year. And I think this is not only applicable to just the US. In many countries in the world, especially even in Africa, you need a lot of stimulus. A number of people have lost their jobs. Some people are not earning as much as they used to earn, but production has to come back. If demand is strong, then investment will increase. Interest rates will fall. In Nigeria, for example, we saw a lot of bond issuances when interest rates touched record lows. For people to raise bond, that means they want to invest in expansion capacity or long-term investment. So we think the world is in need of things like this.
The world is in need of it. One of the key areas, if we turn to sub-Saharan Africa, we talk about hospitality, hotels and tourism, and you look at countries like Mauritius in the Indian Ocean and the island of Seychelles. You go a little bit north, you talk about Tunisia, Morocco, Egypt. These were the front line for the Europeans coming through from Greece, from Turkey, from France, from Spain, and across the Mediterranean. So if you take all that through the East Africa all the way to the south, you talk about Mombasa and all of that. So do you see any recovery here strongly in 2021? Do you think it will happen somehow?
Well, from what we are seeing, it looks like global recovery is going to be broadly driven by the rich countries, the advanced economy, and the more emerging markets. But for frontier markets, like most of the countries in sub-Saharan Africa, recovery is expected to remain very, very slow. Like I mentioned earlier, many of these countries have fiscal vulnerability because of what you just mentioned. Countries like Mauritius and the island of Seychelles, they depend so much on tourism. Tourism is probably not going back to, pre-COVID-19 levels in 2021. Maybe in 2022, 2023, we can start seeing that. But, we don't see that. Apart from that, for the whole of sub-Saharan Africa, large countries like Nigeria and South Africa and Angola, who depend so much on commodity prices, are also likely to drag that growth because, for example, we are seeing about 1.7 or max 1 or 2% growth in Nigeria. That's not enough to pull out the entire region, out of, to take them back to the level we want them to be. So we think generally in many African countries, because of fiscal vulnerabilities and the limitedness of monetary policy, growth is still going to be, considerably weak. And many of them still depend on commodity prices, which are not also expected to jump back significantly in 2021.
For Africa, North, East, West, South, and Central, the big elephant in the room is the new AfCFTA. So let's get to that very quickly. How important do you think this will be for the growth of the sub-Saharan Africa? Or do you have a list of how you think things will move from short to immediate term, at least for 2021, the first 1 year of the rollout of the new inter-regional trade?
Well, my opinion is that I prefer the short to medium term, perspective. I think the AfCFTA is good for intra-Africa trade. The first issue, however, is that, access between and among many African countries is still extremely difficult. I can't even travel by road with ease, with absolute ease, through Nigeria to semi-border into Benin, because the last time I tried going through Badagry, the road was extremely bad. So I think maybe one of the things that the AFCTA will first of all do in the short to medium term is the possibility of triggering the investment that we need in intra-African infrastructure, to make trade very easy. Then many countries, like we've seen in Nigeria, also need to remove all the restrictions, border closures, and all sorts of these things. Because for trade to thrive, both goods and human beings need to be able to move freely. So I think in the short to medium term, these are the things many African countries need to sort out. And then in the long term, Africa needs to build its manufacturing base. So for now, maybe the big manufacturing countries like South Africa, maybe Nigeria to an extent, will be the big beneficiaries if they can export to other countries. But then there's the risk of too much openness of the border, because when the border becomes open, and of course, many of these borders are also porous, you now have the issue of smuggling and entry port trade, where many of the smaller African countries import items from other Western countries and then export them back, into advanced or a bit more advanced economies like South Africa and Nigeria, which always creates problem, and that's why Nigeria shut the border recently.
Interesting. So talking about Nigeria and trying to wrap it up, do you expect our GDP growth to rebound about 1.7 to about 2% this year? Or what factors are those based on, your projections at United Cap?
Yeah, so when we broke it down, what are the factors that dragged GDP in 2021? Mostly the oil sector, mostly the slowdown in the agri sector, which is about 20 to 23% of GDP. Oil is about 10% of GDP. With the manufacturing sector is also a big contributor to that. But when we look at 2021, we think we are seeing a little bit of recovery, especially in the oil sector, which though 10% of the economy, contributes significantly to export earnings. So we may now see some improvement in the manufacturing sector, and maybe with some more seriousness from the security point of view, the agri sector can also see, a rebound, because the agri sector remained resilient, but in 2020, that growth was considerably slow at about 1.5% compared to the average 3% that's been doing for about 5 years now. Again, we may not see as much the scale of lockdown that we saw in the big states like Lagos and Abuja and Port Harcourt and Kano last year. We may not see that in 2021. So, with that openness of economy and, a relatively increase in economic activity, we think there's that chance that we might just be able to do about 1.7% GDP growth, at the minimum in 2021.
The final one, very quickly. What's your expectations on monetary policy stance this year from the central bank?
Well, we think generally the central bank should remain, accommodative in the first quarter of the year, maybe in the second quarter, but from the third quarter going forward, with concerns around inflation and exchange rate, we think at some point Governor Emefiele may start considering tightening of monetary space, and of course that will also change the yield environment that has been considerably low. But we don't see a double-digit yield environment anytime soon.
Wale Olusi, Head of Research at United Capital, thank you very much for giving that very long report a shot in the arm. Have a great day.